Okay. So this is some new style. So today webinars, is an NBFC masterclass is one. This is more of an introduction and registration of NBFC. And this will be the presentations will be given by our very young member of our team, Leena Gupta. Welcome, Mr. Bala Sudhakar ji, and our new faculty this time, Madhavi Gajjar. Welcome to this platform, Madhavi. We are running this webinars, for more than a year now. So welcome to this program. And we also have our own partner, Alifya Sapatwala. So to introduce panelists, Madhavi Gajjar, she's a qualified company secretary and a compliance officer at Light Microfinance Private Limited company. So friends, if you're in the business of asset finance, loan, mortgage, investments, infrastructure finance, microfinance, or housing finance company, you need to have a registered NBFC. So about Madhavi, she is a dynamic and result-oriented company secretary with having more than 6 years of experience in the corporate secretarial functions of a listed public company and NBFC. So microfinance company, which is a debt-listed company. She also possesses competency in the monitoring and ensuring the effectiveness of compliance under the corporate and allied laws toward the accomplishment of the best corporate governance and the legal practice. So, Madhavi, we welcome you again into this webinars, and I'm sure you'll give a justice to the topic. And Mr. Bala. I'll just take another slide. So our panelist is Mr. Bala. Professor Bala is a company secretary having more than 4 decades of experience in the secretarial and compliance. He has worked with a company like Foseco India, and he was a regular speaker in the ICSI-CCGRT. He also regularly contributes to the various magazines, including Chartered Secretaries of ICSI. And our next panelist, our own Sudhakar ji, Chief Consultant Mehta. He is one of the prominent personality associated as a Chief Consultant with Mehta. Sudhakar ji is also member of a Chartered Accountant Institute and also member of the Company Secretary Institute. He is also a member of Institute of Chartered Secretaries and Administration UK, and he has worked as a Vice President of the Corporate Secretary Department of Reliance Industries Limited for more than 1.5 decades. And we have one more, the panelist, Alifya. Alifya Sapatwala is an associated company secretary. He's an associate member of our institute and also a commerce graduate. She possesses more than 10 years of experience in the corporate secretarial and the legal field. She is specialized into listing, FEMA, NBFC compliance, and has been handling compliances under the various corporate laws for both listed and unlisted company. So we welcome you all the panelists and the faculties for the today's programs. So without taking much time, I'll request Bala to take over and then few words from Sudhakar ji, and then we can start with Madhavi.
Yeah, good morning to all of you. I have a great pleasure in welcoming you all for this particular session. This particular session is actually divided in the 4 parts. We will be running in the 4 parts because NBFC itself is a class of companies which is required to be registered under the RBI regulations. Because LLB cannot be a NBFC company, it has necessarily to be a company only. And again here, the NBFC company can be a private limited company, can be a public company, can be a listed company, can be an unlisted company. The NBFC company is not like a banking, although it is a non-financial banking institution. There are differences are there between the banking and the NBFC company, which we'll go through when we run the slides actually. But when it comes to the NBFC company, in addition to the Companies Act, there are a lot of regulations which are required to be complied with the RBI regulations. One of the things which is very concerned is every year meticulously they have to ensure what you call fit and proper person of the auditors, fit and proper person of the directors. That is one thing. And second thing is what happens even if we register a NBFC as a private limited company, then what happened by virtue of the RBI regulations, the company is necessarily required to have the audit committee, nomination remuneration committee, and also there is a separate committee which is actually governed under the asset and liability management committee. All the things becomes applicable. In view of that, what happens is, although Company Act permits only to have the 2 minimum directors in the private company, by virtue of appointment of the audit committee, other committees, etc., necessarily we need to tend to increase the number of directors in those companies. And again, obviously, once we have the audit committee, although under the Companies Act, audit committee is not required, but RBI regulation, it is required. RBI regulation says very categorically, the constitution of the audit committee and the governing rules will be as per the Companies Act. Which means we are again back to confirming with all the compliances which are required relating to that. So there are a lot of intricacies which are actually involved in this. There are separate governance codes are also specified by the RBI regulations. We have 2 eminent faculties actually who are associated with the NBFC company. We'll have the better learning from them, from their practical experience and the situations, etc. And definitely, I'm sure these sessions are going to be much value-added session to all of us. Over to Sudhakar.
Good morning, everyone, and thanks, Bala. We have touched the 3-digit figure, 101 participants. In fact, when I saw initially that I was thinking people are not interested in NBFC topic, that's why we were in 2 digits only. I could say now 3 digits. That means the NBFC masterclass, what we are going to start is certainly useful to the fraternity and to the participants. In fact, friends, let me tell you that NBFCs and the companies, when one has to handle, it needs great amount of knowledge as well as expertise, because every regulator have their own nuances. And especially when you deal with NBFC regulations, you have to deal with Reserve Bank of India, which is one of the toughest regulators. And slightest non-compliances also will be viewed very seriously. This I realized, I think, in my 6th or 7th year of that, after becoming a company secretary. For first 5-6 years, I was working with small group of companies where NBFC was not there at all. So I never bothered for NBFC regulations. Subsequently, in my 7th or 8th years of the entering into the profession, I joined a slightly bigger group where we were having 5 NBFC companies. And in those days, you apply the license and they used to get the license. So we applied for 5 licenses. I think 5 NBFC companies were there. That was the first time I was to read the NBFC regulations and how to ensure the compliances. In fact, that time my management used to ask me if it is our own money, we are investing in our own group of companies, or we are lending to our own group of companies, why we have to comply with RBI guidelines and all. Because the compliances used to be very severe in those days, that you have to maintain this much of NOF, this much of reserves, whatnot, and all those things. Subsequently, I think after almost 2 decades or so, for the first time, the concept of core investment, what is that? Madhavi, that is what? That core NBFC companies, am I correct?
Systematic investment core NBFC company.
Yeah, core NBFC companies. So core NBFC companies means certain amount of relaxations have been given when you are investing primarily in the group of companies or primarily lending to the group of companies. So my complaint or my issue, which was almost 2.5 decades before, was what's called as taken care of, I think about a decade before on. So what is core investment company? What sort of compliances you have to ensure in such cases? And what is NBFCs companies? And because, day by day, now handling NBFC companies is what's called as a kind of legislation of its own. It is equivalent, if I'm not wrong, rather slightly more than Companies Act, more than SEBI listing regulations, NBFC regulations. Why I'm saying that more than Companies Act and SEBI regulations is because every company secretary read this during the curriculum of company secretaries, but the NBFC coverage, if I'm not wrong, in the syllabus is less in comparison to the other 2 regulations. However, that as I was mentioning to you, whenever you join as a company secretary in a slightly bigger group of companies, certainly they will be having more than one investment company or one NBFC company in the group. So you need to handle this subject, if not today, tomorrow, if not tomorrow, day after. So every company secretary, according to me, has to get familiarized with this NBFC regulations. And in fact, Madhavi got good amount of expertise in this particular line. I'm sure that she will put more focus. And I also request Madhavi to say, what is this microfinance company? Because microfinance companies are niche areas actually, and they are doing quite well these days. So Madhavi, just kindly explain what is a microfinance company. At the same point of time, I was watching the presentation of Lena yesterday. And Lena has proved it that if you give an opportunity to the youngsters, because most of the times what happens is when the presentation is made by a management trainee, people may have a wrong impression that how can a management trainee make a presentation on NBFC, such a complicated subject? But she has proved that given an opportunity, the youngsters can do wonders. I'm sure that at the end of today's presentation, you all will appreciate and bless her that she will become a good professional in the coming years. With this, I will give a pause and request Madhavi to take over. Thank you.
Thank you. Thank you, Bala sir. Thank you, Sudhakar sir. So thank you for giving me this opportunity to being a panelist for this webinar. And thank you, Atul sir, for brief introduction of mine. So yes, as Sudhakar sir said that I'm being associated with NBFC MFI, but let me tell you that he has stated very rightly that, you know, in any of the group companies, NBFCs are always core. So in you know, previous company, of course, before coming to Light Microfinance, I was in one company, in the company wherein it was listed company to NSE and BSC both, wherein they were having 2 NBFCs. So it's not just that they were lending to others; they were only lending to their, you know, other companies in the employees. They were taking loans internally, but yes, compliances were still there. But you know, the huge amount of compliances are here. I'm facing here. So whenever, you know, I would like to share one my experience here, you know, with all of you that I was in a public limited company serving as a company secretary and compliance officer. When I came here for an interview, the one question has been asked that this is a private limited company. Why you want to join the private limited company despite of working in the public, you know, public limited company? It is a listed company. You have a whole set of, you know, bunch of group. And I stated that this private limited company doesn't matter because the status is NBFC. Because I got to know, known that these 2 NBFCs that I was, you know, working with as a group company, and there is a scope for every company secretaries or, you know, CAs out here. I'm telling you, the finance company is really a good scope for us. And I'm being here, I'm telling you, there is much more work that I'm getting here rather than having 25 group companies, you know, I was working there. And this MFI, I would like to give you some, you know, slides that MFI is working for the, you know, the group of women and villages who are underserved or not served by, you know, anyone. So no one is giving loans to them. So whenever banks or any other NBFCs are giving loans, that there is some collateral that we have to, you know, take. So MFIs are the companies who are lending to those people by their names, and their KYCs are, you know, getting signed. That's it. We do not take any collaterals from anyone who are, you know, the women. So we only serve the women. And it's really a huge market out there because there are many underserved people in our, you know, country. And we are serving right now for more than 5 states here. And we have really a good amount of portfolio. I'm saying that as part of compliance, if I'm saying that there is a bunch of things that I'm doing. It's not just a secretarial task that I'm performing here. It's not just ROC or MC I'm doing it here. So the majority of work will I do is with the RBI. So Reserve Bank of India is very keen on every NBFCs because they are the regulators. They're always keen on checking on us that what you are doing, what are the details you take. You know, they always ask the details. Okay, give me these details by EOD today. We have to submit all these data, the directors thing, the shareholding pattern that we have to get it approved from the RBI. Director status, as sir has mentioned, that we have to take the approval from the RBI while, you know, going for 30% or more change, 26% or more change. The calculation method is really you know, interest factor for everyone because the regional offices work in a way that everyone has a different method of pattern for, you know, the shareholding calculation. And that's the key. We have to take care of very precisely, because right now these days we are getting more notifications that RBI has cancelled someone's license. Why? Because the corporate compliances are really huge in the NBFCs. It's not just that small NBFCs, not the bank knows. NBFCs are now in a radar of RBI. They always, because if you say that, every day we are getting one notification from RBI saying that, okay, this is the advisory being issued. This is the circular or notification is being issued to the NBFCs. Okay, this is applicable to NBFCs. Now CICs are also, because we have to submit some of the data to the CICs. So all the CICs that has to be, submit now the index with all the microfinance companies as well. They have specified format. Just few days back, 2 days back only, they've issued one guideline to all NBFCs, and to the CICs that, you have to submit this index report to them, and there has to be a ranking. So this is how, RBI deals with the NBFCs, and there is a huge scope for all of us being a professional to just jump into that, boat, and there is much more to do it here. You may see what Lina is presenting here, but
yeah.
Good, Madhavi, that in fact, from your talk, one thing I could get it is that, especially for the benefit of the participants and especially the budding company secretaries, in the good olden days, they used to kind of averse to join the private limited companies. They used to think that, it is a less respectable companies or second-class citizen type of this thing for working for a private company. Whereas most companies at 2013, I have said several times that the demarcation of private and public companies to a large extent has been reduced. And especially the three major sections in the Companies Act 2013, that is Section 188, Section 90, and Section 135 are equally applicable to private limited companies also. In addition to that, if the private limited company get their debt securities listed on the stock exchange, it amounts to more or less like a listed company. Of course, some exemption has been given to them. But you have mentioned that the importance of a company secretary and a compliance officer, especially when you work for NBFC companies and microfinance companies. So with this, that the participants can very well understand that it is not the size of the company, it is not the what's called as listed, unlisted, public, private companies and all. You have to always see the scope of your profile. What kind of a profile you are going to handle, that is more important than working for a... See, there may be 600 and odd, 6,000 and odd listed companies are there as on date. And out of that, only 500 to 800 companies are active. And maybe another 2,000, you can be say, after that, the remaining companies are in fact, sometimes, maybe worse than private limited companies. For a company secretary, there may not be any work except that quarterly filing returns and all. I have seen that kind of companies also. So my advice to the budding company secretaries who are participants in this webinar is that never ever bother that whether it is a private company or a listed public company. See always what kind of profile you are going to be given, you are going to handle that, and accordingly take a decision before joining the company. With this, I request Lina to take it forward and make her presentation. Thank you.
Good morning, everyone. This is Lina Gupta. I'm a management trainee in Mehta and Mehta. Thank you for your time. And can I proceed with the NBFC slides?
Yeah, please.
Thank you, sir, Sudhakar, sir, for your kind words. This really appreciated me and boost confidence for this, my first webinar. So, shall I proceed?
Yes, please. Go ahead.
So let's start with introduction. NBFC plays a crucial role in broadening access to the financial services. NBFCs are increasingly being recognized as complementary to the banking system, capable of financing and spreading risk at the time of financial distress. NBFCs have played an important role in the Indian financial industries, complementing and competing with bank and by bringing in efficiency and diversity into financial businesses. NBFCs have been evolved considerably in terms of operation heterogeneity and asset quality, regulatory architecture. Going forward, the growing systemic importance and interconnectedness for regulatory vigil. Here, regulatory vigil means RBI, who has stringent rules and regulation for the NBFCs. Earlier, it was not there because the NBFCs in ancient times were unregulated or unorganized sectors. But today, as ma'am said, it is very stringent to deal with RBI as NBFC business. Okay. So historical background of NBFCs. NBFC started humbly in the India in 1916 as an alternative for savers and investors. What is meant by this is when people save their money, they always have double thinking of invest into some other businesses or to give it to some other person for some rate of interest for their additional income. So this was at individual level, and then took into the next level, that is business. It has been business of some persons to lend their money for the interest income. The NBFCs initially operated on a limited scale without making much impact on the financial industries. They have invited fixed deposits from investors and worked out on a leasing basis for industrial firms. In the first stage of development, the companies had regulated financing activities, but due to their unique and large-scale operation, it cannot be done. Then RBI came into picture and regulated NBFCs and included the Chapter 3B in the RBI Act, which assigned the authority to RBI for the NBFCs. Major NBFCs in India, that is Birla Global Finance, LIC Housing Finance, Sundaram Finance, Kenfin Homes, First Leasing Company of India, Countrywide Finance, Muthoot Fincorp, Shriram Finance Limited, Poonawalla Fincorp, Edelweiss Financial Services. But let me tell you, all the NBFCs are not only regulated by RBI. Some of them have their other separate regulatory authority, like insurance business. If an NBFC is into insurance business, they are being regulated by the IRDAI. Role of NBFCs: development of sectors like transport and infrastructure, substantial employment generation. And as ma'am said, they have been reaching to the rural areas where bank cannot reach. They also helps to startup, because startup does not get funding in the very early stage or in the innovation time from banks, because bank relies them to very less for their interest perspective. So NBFCs has also played very well in this sector also. So what is NBFC? Let's take into this way. NBFC is a company. First, it has to be registered as a company, and they undertake some financial services, but which is not a banking services. They look alike banking system, but they are not. NBFC get registered under Companies Act, and they undertake business of loans and advances, acquisition of securities issued by any company, government or local authority, leasing, hire purchase, insurance business, and trade business. Definition of NBFC has been given by RBI, as the Chapter 3B has been included by them. So according to Section 45IF of RBI Act 1934, NBFC means a financial institution, which is a company. Here I have highlighted financial institution because the term financial institution has also been defined by the RBI, and non-banking financial institution, which is a company and which has its principal business of receiving of deposit. Now I have also highlighted the word deposit because deposit has also been defined by RBI, that what is called deposit and what is not deposit. As per their definition, everything is deposit, but they have given the list which cannot be called as deposit. Such other non-banking institution or class of such institution as the RBI may, with the previous approval of the CG and by notification in the official gazette, specify. As per Section 45, Clause I, Subclause C of the RBI Act 1934, financial institution means institution which carry on as its business or part of its business any of the financial or following activities. The financing whether by way of making loans or advances or otherwise of any activity other than its own. The acquisition of shares or securities, stocks, bond, debentures, securities issued by government or local authority, or any other marketable securities or alike nature. Letting or delivering of any other goods to a hirer under a hire purchase agreement. The carrying on of any class of insurance business, managing, conducting or supervising as foreman or agent or any other capacity of cheats or kundis, which is more for time being enforced in any state or any business which is similar thereto, collecting for any purpose or under any scheme of arrangement by whatever name called, otherwise by way of subscription or sale by units. By way of subscription here means merchant banking. Like at the time of IPO, when they undertake activity of subscription, they are also called as, they are like NBFCs, but they are not regulated by RBI because they have to register with SEBI. They are separate regulatory authority. Or other instruments or in any other manner, and awarding prizes or gifts, whether in cash or kind, or disbursing monies in any other way, to person from whom monies are collected or to any other person. So this was the definition of financial institution given by RBI. But these are the inclusion. But they have been also excluded certain activities which, if carried by NBFC, doesn't qualify them to be as NBFC. Like agricultural activity, if they have lended their they have lended their money to for agricultural purpose, they cannot be called as NBFCs. Industrial activity, purchase or sale of goods, or providing any sale, purchase, concession of removable property. So there is also a difference between bank and NBFC, though they look alike, but there is a difference. Like if I say verbally, check is being issued by banks, but they cannot be issued by NBFC. NBFCs cannot accept demand deposit, but banks do accept demand deposit. They have their settlement gateway. Banks do have this, but NBFC does not have this type of payment settlement. And banks get license from RBI to start their business. However, NBFCs require registration with RBI. So they are the some distinguish between banks and NBFCs. Meaning an NBFC is a company that provides banking services to people without holding a bank license. However, in case of bank, it requires a license. Incorporated under Companies Act, but first it has to incorporate under Companies Act, and for bank they have to get incorporate under Banking Act. Demand deposit cannot be accepted by NBFC, and banks do accept. Payment and settlement system, not a part of system and cannot issue checks drawn on itself, but bank do issue checks and accepts and have their payment gateway. Maintenance of reserve ratio is not required for NBFC. However, it is mandatory for banking companies. Deposit insurance facility is not available with NBFC, but is available with banks. Transaction services is not provided by NBFC, but is provided by banks. No. A non-banking institution which is a company and has a principal business of receiving loans or deposits scheme or under any arrangement or scheme in one lump sum or in installment by of contribution or in any other banking or any other manner is a non-banking financial company. So there is also a test given by RBI that is called 50-50 test, which is very important and crucial for NBFCs to qualify it as a NBFC. So 50-50 test means that a firm financial asset constitute more than 50% of its total asset. That means if a company says it is a NBFC, so in its financial statements or balance sheet, the investment should be more than 50%. And similarly, income from financial asset constitute more than 50% of the gross income. Means by their lending activities, the interest income should be more than 50%. These two requirements are not one should be complied both of them, not only for one. A firm which fulfills both these criteria will be registered with RBI as NBFC. And if it violates the 50-50 test, the RBI will penalize the NBFC. So conclusion, qualify 50-50 test, register as company under Companies Act, and will get registered with RBI will be an NBFC, will be the requirement for NBFC.
So, Mr. Bala, if you remember, we used to have a company called Wiseman, So there, the RBI asked them to convert company into NBFC because they were more into the lending the same. So they were also into textile, but the majority of the income, more than 50% of the assets and the income, it was coming from the financial services the same. So the RBI insisted. So there are likewise, there are many cases where the group, over and above, if they are doing any other business, their income and the assets are more than those 50%. Right? Huh? I mean, something like this.
In fact, say Atul bhai, one more thing also. You have mentioned that one company is into the textile business, but also lending that and all those, because the lending activity is more than the regular activity. But many of the times in the groups, what happens is that some companies invest money, invest in the shares of the other company. Okay. And especially in case of promoter companies, what they do is they make investment in the listed company.
Right.
And that is the only financial asset what they have. They don't have any other thing, and they get the dividend from that listed company. These companies, what happens is they are technically called as NBFC companies, and they are doing NBFC business because more than 50% of their financial assets are, the assets are in the financial asset shape, and the income is from the dividend. That is also more than 50% of their income is from the financial asset only.
No.
Unless until such companies do some kind of other activity, maybe you create some other assets or alternately create some income more than your dividend income. Otherwise, you will fall into this definition of NBFC company and you have to go for registration. If not as NBFC, you have to go as a core NBFC company. You have to go for the registration. Several times it happened that company secretaries make a fox pass in this particular case. And similarly, secretarial auditors also make a fox pass in this. They don't see, whenever they're looking into these kind of companies, anywhere they are there, if they are the secretarial auditors, they have to ensure that if that company is having assets more than 50% in financial assets and the income also is coming more than 50% of income from that financial assets, those companies have to get registered as NBFC or core NBFC companies.
You're
So
absolutely right.
you're
Absolutely right to Sudhakar. In fact, I had a similar experience with when I was working the Vodafone group of companies. You all may be knowing the Vodafone group was actually acquired from the SR groups and other thing and all which has come from Fetch. When they acquired the business, the company was required to acquire almost about 20 companies apart from the main business of this telecommunications. When they acquired the 20 companies, out of them, some about 5 or 6 companies, as Sudhakar puts it very clearly, they were only doing the investment business that is also within the group companies only, nothing else. But unfortunately, 1 or 2 companies, they are not registered as a NBFC company. And the matter has actually gone. RBI took up the matter very seriously. They told, please get registered NBFC company or do something else. It cannot be done. Like that, it has happened. Ultimately, the company has to necessarily get registered with the NBFC company. It is what it has happened. At over a period of time, the company had something about 7 NBFC companies registered with the RBI. And that particular time, the RBI has come up very heavily, coming that you are actually disproportionately more NBFC companies within the group. Please reduce and bring it to the minimum level. That is what they have actually given the instruction subsequently. With the result, the entire Vodafone group companies, almost about 12 companies, they actually formulated the scheme of arrangement and merger. And what they have done is they have merged about 11 companies into one company by of the amalgamation. I think that was one of the amalgamation which has happened with the NCLT almost more than about 4.5 years where I was part of it. So RBI regulations are very stringent actually. Yeah.
So I also would like to share my experience in the same that there is one company that, to add it to Sudhakar sir's points also and Bala sir, your point also, to which not only the secretarial auditor or the company secretary, but, the statutory auditor also have to take a requirement because there is one declaration in the audit report. They are mentioning that they are not falling under the PBC criteria. So principal business criteria, they are rectifying that and they are, just copy pasting it. Sometime it happens because there is one company which was very good company in which RBI has given a notice that this PBC criteria, they are stating that it is not meeting any PBC criteria, but we are seeing in the balance sheet and P&L that okay, they are meeting the PBC criteria. Please justify your words. and not the statutory auditor also got, the letter from RBI as well. And in the same company's incidents, I'm telling you that if it is not been taken care, by the auditor or the company or the director, that director cannot be considered as a fit and proper to be appointed for any other NBFCs who are falling under the PBC criteria, but not having the license. So this is also the point that we need to, consider while checking all these principal business criteria things.
See, let me add one more thing also to this is that these days RBI is not giving the NBFC registration, NBFC licenses or registrations also. They say that for one group, only one NBFC company should be sufficient. Why you have to have more than one NBFC?
Correct. That is what the point. Now it is coming up.
Okay, so in fact, in such a big group like Reliance Industries, we used to have 3 NBFC companies only. That also prior to that we got these licenses. And RBI, whenever they used to come for inspection, they used to say, why can't you consider merging these companies or surrendering the licenses? Why you have to have 3 NBFC companies? Like that it is. So several times it happened in the group of companies, you used to hold the shares of the listed company through some other companies. You can hold that thing, but only thing is please ensure that you should not get into the NBFC definition. Because once you get into that, you are not supposed to do the business unless until you get it registered and get that NBFC registration or license, whatever you may call it as. And RBI is not going to give you that. Suppose if you have 5 companies in your group and you want 5 licenses, they won't give you that. So that means what? You cannot do the business. You have to necessarily come out of that thing. So this is a tricky situation. Please be aware of it.
That is right. Another thing is, Madhavi would be knowing it very clearly. It is not only RBI sent the regular mails, etc. notification, but they also go to the extent of calling the people and asking the information then and there. Their follow-up is actually...
They are asking everyone. They are asking everyone, even though the company were not NBFC, the group company, any of the companies were not NBFC. I have seen one of the director have been, have the notice the company. So I'm telling you the real scenario here. So there is one director who is appointed in the NBFC, and it is really a good, standing of the director. They are having vast experience, and they have been, stated, receiving letter by RBI by stating that you are not falling under the fit and proper criteria. You please step down from this NBFC because one of the, company in which you are a director is falling under the PBC, and you have not gotten the license even after RBI has given you the letter. So, even though director was not aware of the situation because they were only signing, that paper because of these, other group companies and everything they have to take care of. But this is the scenario that people has to face really in the, practical scenario. So we have to take care. They are asking everyone is the information. They were asking the other companies, even though the other, director or any employees get into any other NBFC, they check and reference the diligence of RBI. Right now is really high for a person and the NBFC. Even though they are not falling under, the RBI's purview or regulators' purview, they do check and their diligence are really that.
So one more thing I would like to add here, okay, this is particularly challenging for private companies, small private companies, which are not carrying any business, but they have investment in shares and such companies. So here the revenue automatically increases more than 50%, and by default they become eligible for NBFC registration. So this becomes very challenging for them, and they have to take care, particularly those companies who are not carrying any other business, the principal business.
So this brings to a question, Sudhakar ji, and of course, Madhavi. Like, see, I have seen many companies or many group, they incorporate a company. It's like a holding company. Their purpose is only to hold the shares of the subsidiary company. Now, in those cases, for all purpose, they fall into the criteria of those RBI classification being an investment company. But I've seen many of the groups, they are not going for the, RBI registration, even though they are supposed to, because, what they say, look, I'm just invested my fund in my one company, which is my subsidiary company. So I don't know, both those companies been exempted or there are some special regulation for them?
Nothing. They have to get
nothing is there. They have to take necessarily the NBFC license. If it is not there, they are sitting on a peril. definitely they will be penalized heavily. That is there. They have to pay the price.
Yeah, opportunity of being heard is always provided by RBI. Even though, RBI takes their own stand, it's always there, but they always give you the opportunity of being heard. If you are very proper to provide the response to RBI, they will ask you to do the necessary actions that please, reduce your whatever the income from your, investments are. And then, you can carry out the activity, continue to doing whatever you are doing. So if you want to do in this way, then you have to get the license. Or if you do not want to get the license, you reduce your whatever the things are there. And you have to mention also, auditor also has to mention there in the audit reports stating the same thing in the next year also and the same year as well. So this is there.
In fact, there is one question, one of the participant has put it that it is a consultant company basically, and then they have ultimately stopped that consultancy and given unsecured loan. They're getting the interest. Obviously, this company, their NBFC activities. Now, what happened is one side we are discussing so far is about RBI side. Even the Ministry of Corporate Affairs, also the ROC can give you a notice tomorrow. You are indulging in a business which your main objects is not covered. Your main objects is for something else and you are doing some other business. Okay, because for NBFC companies, there is a separate code they give it, and ROC will inspection and all those things, they will go as per the code what they're allocating to you. So you might have been having manufacturing objects in your main objects clause, and you are doing the investment business or lending business. It is altogether a contradictory things, and even ROC may come on you heavily.
Not ROC may come up. There are already some cases were there where ROC has taken and people have been actually penalized.
See, so apart from the company secretary of the respective companies, I also caution the secretarial auditors, including our own people also who are doing the secretarial audits. Please ensure that wherever, whether it is coming in your scope or not, you have to see that is there any company doing this kind of things, and please advise your clients accordingly. And wherever you have to also bring it in your report, please do that. Yes, Lina, please go ahead.
So for all purpose, the example which I gave, holding company exclusively, holding shares in a subsidiary company, those company is required to have the registration with RBI, right?
Yes, absolutely right, Atul, absolutely right. As I was telling you, in one of the Vodafone group of companies, they were holding shares investment only in the group company, nothing else. The entire income which was coming from them is only the dividend income which was actually coming. Of course, amount of the fixed deposit they had, that was the only income. But in spite of that, they not to get registered NBFC registration. That was the case. And again, as I was telling you, one particular point of time, the number of NBFCs actually gone up beyond, according to the RBI. They said you cannot have too many NBFCs. Either you revamp it and reduce it, merge it, whatever it is. That is what they have advised. Ultimately, I told you the merger has actually happened.
So the question which was asked by in the chat box, where this private limited company, without doing any activity, they have just given a loan to their group company or XYZ company, and they do not have any other transaction but only giving a loan. So this also, I think, fall into the category of a NBFC, right?
Absolutely.
So because, irrespective of amount, it says, one consulting company stopped business and was given an ICDs of 5 lakhs in getting interested, 50,000 per
Atul, you don't need to stop the consultancy business. You do the consultancy business and do also the lending activity. And if your financial assets are more than 50% and your financial income is more than 50% from the financial assets, despite the fact you are having your consultancy income also, but still it will be supposed to be registered as a core investment company.
So, see, I've seen, many groups, what they do, they just, I don't know, through some, they wanted to pass those money from one private limited company to another private limited company. And now that is the only transactions, in their whole year. So if, they are putting some money or lending your money or investing in some other company, and that is the only activity, then probably, all those companies will fall into, or they need to have a registration, That's what I understand.
Correct.
Yeah, absolutely, you're right. Your understanding is absolutely correct. You have to get a registration. No other go.
And actually, the prior registration is required as per RBI. That's why RBI is putting notice to every company that why you are, doing this PBC, you are meeting PBC and you are not taking license. Because whatever they are doing, checking that, you have to do the pre-mark rather than, the having the cautious call at the first time only. So notice is being, sent to all the companies because of that reason that you have to take first license, then only you can do this NBFC business. And as per PBC, you have to do this thing. And as already said by Bala sir, that we have to check all the time that whatever our main business is, and as per Companies Act, we have to take that our main businesses is we have to focus and our income should be generated from them. Other income can be different, but 50-50 cannot be matched as per the RBI.
Especially those company secretaries who are working in a group companies, they need to run continuously year after year this necessary check and ensure the compliances. If you do not ensure the compliances, we are sitting definitely on the peril. But as Madhavi puts it, RBI will give a reasonable time to set right the things, etc. and other thing and all. If you do not act on it, let me tell you one more thing also. The penalties levied by the RBI are going to be much, much severe. It is not running just what you call our adjudication officer penalty, etc. and other thing and all under the Companies Act. It is running in lakhs and lakhs of rupees. They will actually levy the penalty. I have virtually seen in one of the group companies, it has happened like that. They have to end up in paying about more than about 1.5 crores penalty in respect of the 4 of the companies where the default has actually happened. So that is the severity of the regulatory price you will be paying it if these are non-compliance.
Yes, truly said.
Correct, Madhavi?
Yes, sir. Yes, sir. Penalty is really high, and we don't know from where we need to find that how much percentage they will find. The penalty for the amount, how much income you earn. Okay, three times, 5 times, 10 times, 100 times.
Right.
We don't know how much severe they find it. So you have to be very cautious while you are replying or responding to RBI's messages, because it should not be found anywhere that you are challenging them. Okay, you are stating this. No, we are doing this. No, you have to be very humble while you are responding to RBI. I'm telling you, even though you are stating anything which is right, you have to be, very humble in your letter as well. You have to set a contacts with RBI before, if you know someone who has shared the letter, you can speak to them. But I'm telling you, penalty rather than penalty, it will jeopardize your reputation in the market as well. So if something has a group company, they have really good, good reputation in the market, like a listed company and everything, they will jeopardize. That RBI has, sent a notice, they are doing something, it will be penalized. So I always prefer being a company secretary that, that even though it is a 50 paisa penalty, it will not good for the reputation. Rather than you should, pay for the compliance fee would be really great.
Yeah, Lina, you can proceed.
Okay, sir. So classification of NBFCs by its activities. NBFCs are classified on the basis of their liability structures, the type of activities they undertake, and their systematic importance. In the first category, NBFCs are further subdivided into NBFCs deposit, which are authorized to accept and hold public deposits, and non-deposit taking NBFCs, that is NBFCs ND, which do not accept deposits from public. NBFCs can be categorized on the basis of activities undertaken, as they typically focus on niche segments and fulfill sector-specific requirements, like Microfinance NBFCs. They undertake niche segments like rural areas, women welfare. Likewise, type of NBFCs and activities: asset finance company, NBFC investment and credit companies. They undertake activity of financing of physical assets, including automobiles, tractors, and generators. They particularly invest in asset-based companies. Like if a infrastructure company is there, they finance them to help them to take assets. They are very huge of amounts, so the company cannot have that much of funds, so they take assistance of NBFCs, and the asset finance NBFCs lend them the money. Loan company, NBFC investment and credit companies, they provide loan for loan finance. Investment company, acquisition of securities for purpose of selling. Then NBFC infrastructure finance company, they they provide loans in infrastructure. So there is a difference between these two: provision of infrastructure and asset finance company. They for infrastructure company, if they want to take any asset, they asset finance company, NBFC come into picture. And for the infrastructure finance company, for infrastructure loan, like they have to build a bridge or any sort of infrastructure in the city, they finance in them. So there is a difference between these two NBFCs. NBFC systematically important core investment company, makes investment and loans to group companies. Infrastructure debt finance, debt fund NBFCs facilitate flow of long-term debt into infrastructure projects. NBFC MFI, that is microfinance institution, credit to economically disadvantaged groups. NBFC factoring business, they are more into the factoring business, acquisition of receivables of an assigner or extending loans against the security interest of the receivable at a discount. NBFC non-operative financial holding company, facilitation of promoter group in a setting up a new banks. They are more likely like SPV, special purpose vehicle. So mortgage guarantee company, undertake of mortgage guarantee business. NBFC account aggregator, collecting and providing information about a customer's financial asset in a consolidated, organized and retrievable manner to the customer or other as specified by customer. NBFC peer-to-peer lending platform, that is providing an online platform to bring lenders and borrowers together to help mobilize funds. These all are the type of NBFCs and their activities. These all type of NBFCs are being defined by the RBI in various directions issued by it. That is systematically important non-deposit taking NBFC. Means a NBFC not accepting or holding public.
Lina, if you can just go to the previous slides.
Yes, sir. This one?
Yes. So, Madhavi, nowadays, we have so many platforms, like, for example, like, Ola, Uber. Now, Ola, Uber is not a taxi company or, travel company. It's a just IT company, basically. Something very similar. I've seen a platform where there are many banks who participate, and they, give a code for some lending. You put a request, and there are 2-3 people who will say, okay, now, we can provide you on a X amount and Y amount. Now, if I'm a platform providing company, whether I require a RBI registration. Sudhakar, you understood my questions? It's basically a platform,
Yes, it's a platform. So as it will be also considered as a P2P company, that you have to take the license, that you are not basically lending to someone, but you are pulling someone here in your forte, that and so it is collaboration, that you are being mediator, working as a person. So you are also liable and subject to RBI regulation. So there are some certain, regulation that you have to follow for being, moderator for lenders and borrowers.
The only thing is, as such, individuals, when they are doing in the individual capacity, they will not fall into the RBI regulations. But if you are having any structure like a company or LLP, yes, that point of time, certainly any kind of financing activity. So let us not confine ourselves only to investment, lending, guaranteeing, securing, and all those things. So any kind of finance activity, okay, that will come definitely. But suppose, for example, you are running a chit fund company. Suppose an individuals are running the chit fund or kitty party kind of thing, that is okay, fine, nobody bothers. But if you are having a private, if you are having a structure, legal structure, and you are conducting a finance business, certainly you have to do that. And especially in fact, in the good olden days in Kerala, we used to call them as blade companies. These companies, what they used to do is they used to run this kind of chit fund things, and they used to mobilize the money, and they used to abscond, in one fine night. So that's the reason actually RBI brought the Chit Fund Act also, and which are the provisions are very stringent. And that is why any kind of activity, whether it is a kind of, collective, collecting funds, and again doing something thereafter and all, everything has been brought in more or less into the finance activity. Okay.
Absolutely, you are touched upon the right point, Sudhakar. I remember definitely especially in the southern part of the country, this sort of the chit funds and other things and all, overnight you see the chit fund attracting the people and suddenly vanishing. This has been actually seen. That is one of the things which has actually come under this. That is why the chit fund has been brought under this. That's right. You're absolutely right.
And not only that, it is called as Madras Chit Fund Act.
Yeah, I know.
If I am not wrong, the Madras Chit Fund Act is applicable across the country. If I am not wrong, I'm not very sure.
You are right, actually. In fact, if somebody wanted to impose in some other state, at least the judgment has come, it is applicable across. You are right.
Yeah, Lina.
Okay. So definition of NBFCs under various directions issued by RBI. Systematically imported non-deposit taking NBFCs means the NBFC not accepting or holding public deposits and having total asset of rupees 500 crore and above as shown in the last audited balance sheet. So for qualifying as systematically important non-deposit taking NBFC, it should have total asset of rupees 500 crore and above as per their last audited balance sheet. Okay.
Now we can hear you.
Shall I resume from infrastructure finance company?
Yeah, please do that because even technology is testing you today.
Infrastructure finance company means a non-deposit taking NBFC that fulfills the following criteria. That is a minimum of 75% of its total asset deployed in infrastructure loans, net own fund of rupees 300 crore or above, minimum credit rating of A or equivalent of CRISIL, Fitch, CARE, ICRA, Brickwork Rating India Private Limited, or equivalent rating by any other credit rating agency accredited by banks. CRAR of 15% with a minimum tier 1 capital of 10%.
So this total assets, when you say, Sudhakarji, what I understand, the total assets being the company, suppose if I am a housing finance company, so the amount which I have lended is my book, book which I created. So that's what, the assets which I'm creating, right? That's what. Because, somebody asked a question, what do you mean by total assets? Yeah, Madhavi.
Shall take it up that question. So we actually do check it on regular basis that what is the total asset, because NBFCs are classified by the amount of total assets. So total asset is your balance sheet size only.
Correct.
So in your balance sheet, whatever the total number of assets you have in the total, that's your total assets. If it cross 500 crore, it's very simple. It's cross 500 crore, you are subject to more RBI regulation, corporate governance in the RBI, like CB and Companies Act. You have different types of corporate governance in the RBI. Once you cross this 500 crore, you will be calling as a non-deposit taking systemically important NBFC. So there is huge compliance will be coming onto you then.
So what Madhavi is trying to say here is it is not only the financial assets. When you are doing an NBFC business, whatever your balance sheet asset side is your total assets. What is the rationale for that? Say, for example, I am having some buildings, but that building also is my office building only. Or I am putting it on rent, suppose. Again, I am getting an income on that thing. So my business, basically, whatever the assets are there, those are all assets pertaining to the business in which I am. That's why you have to take the total assets on as per the balance sheet only.
Yes.
So if my lending is 200 crores and my building is 300 crores, so it means, I fall into this category, right? 500 crores plus. So my assets,
Technically, yes. Technically, yes.
Yes, absolutely, yes.
But only thing is, it is a hypothetical. It will never happen. A 300 crore building, you have a 200 crore business you are having. It never happened like that. But yes, if at all it is there like that, it is definitely come in the systemically important, NBFC.
Yes.
Okay. Yeah, Lina.
So investment and credit company, NBFC ICC, means a company which is a financial institution and it's
Again, we lost your voice.
No, actually, there is a questionnaire which has come. That's why I think she stopped, if I'm not wrong. On the screen, one question has come.
Correct, sir.
Don't worry. You go ahead with this thing. The questions will come for the participants. You see your screen and go ahead accordingly. Yeah.
So the first trigger, in all cases, when you talk about classifications, assets and everything, it's all statutory. It starts with the statutory auditors, right? Which are all PCS, तो बाद में आएगा, right? Na, Madhavi?
So, yes, it starts with the statutory auditor, or I would like to tell you that, we always check it on quarterly basis, even though,
It starts with the company secretary first, actually. Company secretary has to continuously keep checking.
Yes,
because
it's all about the auditor.
You are talking statutory auditor only at the end of the year. But the company secretary who's within the company has to check continuously throughout the year.
So sir, here I would like to add one point that, in every NBFC, they have the unaudited financials, checked by the auditor in a quarterly basis. So if I just talk about mine, that we check it on a monthly basis, that what the total asset is. So that's how internal checks are there. So more or like an auditor is of course always involved. If you do not talk about auditors, so in my company we crossed this 500 crores somewhere in span of time, that November, December. But we got to know in very fraction of second that because we were knowing that we were checking all the times that, what my total asset is. So monthly basis, we can keep a track that, every month we can check if company is really doing well. And we know that we are, almost touching the 500 crores. If not, then yes, quarterly basis can also be checked, or auditor will anyhow come on, yearly basis.
So then, I have another questions now. So at the middle of the year, if those size goes beyond 500 crores, so what is the implication? So I have to start applying, those, so all those regulations start applying to me immediately, or you have to wait till 31st March?
So no. So let me tell you that we have to immediately inform to RBI that, see, we have seen that this is unaudited. My financials are unaudited, but my asset looks like that I have touched 500 crores. And they will be opening the window for 5. So there are more returns that you have to file for 500 crores. So RBI returns. Right now it is in XBRL form. Previously it was on a Cosmos. So they will be, opening a pop-up in your XBRL that, okay, for 500 more crore, you have to write this DNBS return. So this will be pop-up. But all this compliance, you have still time, for quarter or so, because you cannot immediately start doing. I'm telling you, right. There are lots of policies and compliance you have to do once you touch 500 crore. You cannot pre-plan those things, right? But yes, if you just know that while you are tracking is very important for CSEs also. That while you are tracking those things, okay, I've touched my 350, I've touched my 400. So I have to prepare a checklist for that, what are the policies, what are the corporate governance, what are the compliances that required. Director have to give some of the declaration I have to take on immediately basis. So those are the things that we have to start preparing on, pre-planning mode. And then once you touch this, you just intimate RBI. If it's not audited basis, then you intimate RBI. If it's audited, you still have, RBI will not jump onto you saying that, chalo abhi ke abhi do. No, they will never ask you that. They will also give you the time for a quarter or maybe a 6 month in some scenario. But I'm telling you to everyone that please be ensured once you touch 500 crore, in very next board meeting, you take all these compliances. Otherwise, you will be, of course, subject to RBI's questions. So policies are really much more we have to take care. And, the fraud guidelines are applicable. The KYC things are there. Fraud guidelines are really wide and huge. We have to take. RBI is very conscious about the AML things, anti-money laundering, the fraud things, the employees fraud, even though the cash fraud, even though it is a minimal of 1,000 or 10,000, we have to file the FIR, we have to file all the returns, we have to intimate to RBI within 21 days once the fraud crosses the 1 lakh rupees, dacoity, any of the things, murder, anything we have to intimate on immediate basis to RBI. So this is actually the subject to huge compliance. That's why I just jumped onto that if 500 crores, then everything is like that. You have a huge list to follow, and you cannot miss on.
And you have yearly inspections also. Sometimes they may pick up.
We have. Even though RBI conducts right now after COVID, they conduct virtual inspection. They call it as the off-site. They do not call the on-site, but they call it as the off-site. Inspection. They do check. And let me tell you in a funny way, I'm telling you that they doesn't need to come and check to you for inspection is a tagline. They will anyhow ask you. I have, flooded with the emails, in every week that 7 or 8 mails are pending to respond to RBI that, okay, give me this information, give me that information. I want this to be, or if you are in delay, they'll give you the timeline also. Okay, by EOD today, by EOD tomorrow, by EOD that day, you have to submit. If you are not, then they'll be keep following up on those emails that why you are not doing it. If you haven't done it, they will ask you more questions. So that's how RBI works. So inspection is like a formality, but they ask
and Madhavi, not only that, even when the inspection report comes to you, you have to give the reply to the inspection report, and that reply you have to place it before the board, the draft reply.
Not just a reply. Let me tell you, I do it on a regularly basis. So not only the reply, once, RBI gives you anything, within 15 days, you have to tell to the board. So, in some of the NBFCs, they have some other investment from the foreign countries or other, the huge investors also. So they have some, SHA, SSA, in which they put all these conditions that 15 days, we have to intimate us. So we have to intimate to the board immediately basis that, okay, we got some love letter from RBI and now we have to respond to them. So, okay, we will be going to respond. So now, not only RBI, you need to convince to the board and investors as well that why this, RBI has put in those implications on you that, how you will be responding, why those first, why these remarks and qualifications from RBI. First, you explain it to me and then to RBI. So that's how it is.
Not only that, as Madhavi puts it very clearly, when you keep on vigilance on a regular basis, one of the things which is required is appointment of the compliance officer under the PMLR Acts, and also putting an internal mechanism to detect the various transactions what she listed. What do you call the fraud, terror mechanism, that, etc. Another thing and all. That actually needs to be.
List is too huge, I'm telling you.
Yeah, that need to be in place. First and foremost thing, that is the requirement. That is why when yesterday when we were talking with her, I asked her actually, are you a compliance officer of the PMLR or are you a company secretary? She says, I am actually in both. So that is a fundamental thing which is start with. Then he becomes responsible for everything under the PMLR Act.
Yes.
So when I mentioned about this draft reply is to be placed before the board, sometimes, in fact, getting the inspection completed by the RBI and replying to that is easier than facing the board.
Yes, board and
investor. In fact, I used to have a tough time when that draft reply is placed before the board before giving it to RBI, because you have to tell RBI that this reply has been placed before the board, because RBI wants that the board has to take onus of the reply what the company is giving. Tomorrow, if anything goes wrong or any kind of what's called affirmations or undertakings the company is giving to RBI and it is not complied with, then the RBI is going to take the entire board to task. At that time, any director cannot say that, look, I am not aware of this. So fact, if any of your director is having NBFC experience, you will really have it.
In fact, Sudhakar, when we used to write to the RBI, we actually used to write this particular reply has been actually placed on the board. It has been approved by the board of directors, and we are replying accordingly. That is the way we used to word it, and we used to send it to the.
No, that is how it is to be given also.
Yeah.
So, sir, Sudhakar ji, I have some probably Madhavi can also answer this. See, one of the secretarial audit where the practicing company secretary went, and it was some payment bank. Now, RBI must have done some audit, and they have listed some 20 observations. Now, my question here is, as a practicing company secretary, if you are doing a secretarial audit, so what do? You put all those 20 observations in your secretarial audit, because probably RBI has found something which is not done as per the regulations. So, because
it is not required. In fact, you see that if you are the secretarial auditor of a payments bank, see, payment bank regulations are different to that of NBFC regulations, number one. Number two, when there is an inspection report is there, the RBI inspection is slightly different to that of your audit. Okay. So, but at the same point of time, if there is in that RBI inspection, suppose you come to know that while doing your audit, you came to know that the inspection has taken place. As a secretarial auditor, please take that report go through the report and the answers given by the company, and before your audit completes, whether the compliances are in place. If that is the case, then there should not be an issue. But if the inspection is completed, but your replies are yet to be given, and in that inspection report, any of your secretarial audit related issues are there, certainly you have to qualify the report. You cannot shut your eyes on that.
Yes.
But not, suppose that, for example, there are 30 observations of RBI. You may not get affected by all 30 observations as a secretarial auditor, because your audit per scope and purview is different, and the scope of the RBI audit and purview is entirely different.
Yes, and including, it will be more or like on a statutory auditor that they will be taking care of the other things. So only returns and all the part, of course, that we have to, being a secretarial auditor, we have to take care of, because returns has to be taken care of by us. But the other thing in the payments bank and all that, statutory auditor will take. So they have bifurcated in that way. So they will never come on to you for other auditors' duty. That's for sure. If they are coming, you can simply reply, this is what come under my purview, and I have stated that and checked whatever to your owners and office. So we can do that. So they will never come on to you for other auditors' responsibility, but it is equally distributed to the stat auditor and the secretarial auditor. So in the NBFCs or payments bank also has the internal auditor as well. Concurrent auditors must also be, also be to be going on. You can ask for those all audit reports during your secretarial, audits, and you can check all those observations, so that it will be very easier for you to identify and rectify that. Why? Because they will be doing it on a quarterly basis, and we will be going for a yearly basis. So we can rely on those reports, and while we are doing all this audit, I mean, this is just a method that we may use it.
So, sometimes Atul bhai, it may so happen also that your client may not be willing that if you qualify your report, he may not like it. That you should not bother for that, whether your client likes it or not. Several times it so happen, whenever you want to qualify, whenever you want to give any kind of observations, obviously no client will be happy. And sometimes your company secretary friend who has given you the audit, he will say कि साला तुमने यार backstab कर दिया मुझे, मैंने तुमको audit दिलवाया और तुमने मेरे को qualify कर दिया. It just happens. But at the end of the day, please remember that you are answerable, number one, to the concerned regulator, and apart from that thing, you are professionally also, responsible to the institute. Tomorrow they may take a disciplinary action against you if you are not qualifying your report. So both ends you will get beaten. So as an auditor, when you are wearing that hat, you should not bother for your friendship. You should not bother for your client. You should not bother for your future, whether you will get the audit again or not. However, let me put this thing also. This is very easy to say, very difficult to practice all these things. So you have to be tactful and see how best you will be able to find a remedy for the situation in an amicable way. But in that process, never ever compromise. Insulate yourself first and then your client.
So what I understood, let me just quickly conclude. So out of those 20 observations, now company has answered those 15 the queries. Now the 5 remain. So you mean to say those 5 which has not been answered or handled or been complied with, or not been properly been answered. So those 5 observations you will take it in a second audit.
See, you don't need to reproduce it, because see, for again the same thing I'm telling you, you have to see that whether it is required or not required. You cannot give a general answer for this. It is very judgmental. So what you have to see there is by these 5 questions are there. Say, for example, definitely in MR3, you have to comment about specific laws applicable to the company. If it is a payment bank, certainly the RBI regulations, whatever are acceptable, applies to the company, definitely you have to look into that. But at the same point of time, to what extent you have to comment in your secretarial audit report, that you have to see that. Whether you want to reproduce it or you will say simply that the inspection of RBI has taken place. The company is in the process of giving the reply to that. We will give like that. Or you will reproduce that. It depends upon the situation. And you cannot just give a general answer for this thing.
Okay.
That's what my view is.
Yes, sir. Yeah, Lina, you can...
Sir, just a moment. Pertaining to inspection, I would like to ask Madhavi one thing. does RBI itself conducts the inspection or it authorizes some external authority, for example, a chartered accountant to conduct the inspection?
No. There is no third-party inspection that has been done by RBI anytime. They have themselves an auditor. They outsource to the other RO. So RBI has a regional offices, right? If one regional office has more than whatever they expected their inspections, they can ask other RO to help for their inspection. But it's only RBI officials they are doing inspection. They will not ask anyone else to do.
Alifya, in fact, RBI is having a special cell for inspections.
Yes, I understand
they got trained for that particular thing.
Yes, so one of our NBFC clients received a letter from a chartered accountant saying that RBI has authorized them to conduct an inspection. So we were surprised and we said, let him email the authority letter from the RBI regarding this inspection. So this thought came to my mind to ask you when we were speaking about inspection.
No, we have never faced this inspection. I'm telling you, it's more than 5 years inspection that has been conducted.
Alifya, let me tell you one more thing. If at all that kind of chartered accountant is approaching the company that they have been authorized like this, even if suppose they give a proof of RBI letterhead or something like that, don't believe that. Please check with RBI directly, because your competitor may want to conceal the data from you. And these days, anything is possible. So don't go for that. RBI never do the third-party inspection. If at all they do, please go and check with RBI.
If they do, they intimate. If they do, they intimate. They intimate to the company. They are very responsible in terms of that.
And let me also tell you one thing, because I have faced a lot of RBI inspections. But they are very friendly. It is not like that, they are doing a kind of a court-martialing or something like that. They are very friendly. At the same point of time, suppose if at all they have find some observations, you are lacking certain issues, give them a commitment, give them an undertaking that within this much time, I will regularize the things. They will do appreciate that. But one thing is definitely there. Once you give an affirmation, once you give an undertaking, please ensure the compliances.
Yes. Yes, Leena, you can move ahead.
Okay, ma'am. So, investment and credit company, NBFC ICC, means any company which is a financial institution carrying on as its principal business asset finance, providing of finance whether by making loans or advances or otherwise for any activity other than its own and the acquisition of securities, and is not any other category of NBFC as defined by the bank in any of its master directions. NBFC factor means a NBFC as defined in clause F of section 45I of the RBI Act 1934, which has its principal business as defined in paragraph 40 of this direction and has been granted a certificate of registration under subsection 1 of section 3 of the principal business, and NBFC shall ensure that its financial asset in the factoring business constitute at factoring as a Factoring Regulation Act 2011 at least 50% of its total asset, and its income derived from factoring business is not less than 50% of its gross income. Third one, infrastructure debt fund non-banking financial company means a non-deposit taking NBFC that has its own net own fund of rupees 300 crore or more and which invests only in public-private partnership, that is PPP, and post-commencement operation date COD infrastructure project, which has completed at least 1 year of satisfactory commercial operation and becomes a party to a tripartite agreement. Further, NBFC Microfinance Institution means a non-deposit taking NBFC other than a company formed and registered under Section 25 of Companies Act 1956 that fulfills the following condition, that is minimum net own fund of rupees 5 crore. For NBFC MFIs registered in the northeastern region of the country, the minimum net own fund requirements shall stand at rupees 2 crore. Not less than 85% of its net asset are in the nature of qualifying asset. Only the asset originated on or after 1st 2012 shall have to comply with the qualifying asset. As a special dispensation, the existing asset as on January 1st, 2012 shall be recognized towards meeting both the qualifying asset criteria as well as the total net asset criteria. These assets shall be allowed to run off on maturity and shall not be renewed. Further,
just Madhavi, quick, so all this microfinance company, they are not supposed to take the fixed deposits?
No, because we are not supposed. So it's not about the also company has, the deposits and the non-deposit taking company. So if you are falling under the non-deposit, then okay, you have to take the permission of RBI for taking deposits, but of course, fixed deposit can never be taken.
Okay, because the definition itself says, look, the company which is not taking deposits anyway.
So this is for the non-deposit taking NBFC. So deposit taking NBFC can be there, but they have subject to RBI approval. So we have to take approval only simply for this. So they will be giving the renewed license by stating that you are now deposit taking NBFC MFIs.
That is, you have to take a RBI prior approval and you have to classify your company either deposit taking finance company or non-deposit taking finance company. That is what it is required.
Yes, we have to take, so license will be there stating all this information about that non-deposit taking NBFC MFI or deposit taking. So they'll be giving you the letter and giving you the approval as well.
And in fact, non-deposit taking companies, every year they have to pass a board resolution that they are not going to accept
starting of the year.
Yes, starting of the year, they have to pass that board resolution.
Within 30 days from the completion of the financial year, we have to take this. So we always take it on a circular resolution that's more convenient.
Yeah, Lina.
So,
Mr. Bala, you wanted to take any questions, to chat box me?
Yeah, we can do that.
Yeah.
Let us start from the beginning.
Or should we take it afterward?
I think better, because it is 12:20.
I know.
We will take it.
Okay, Lina.
Then we will take it up.
There's an account aggregator, which is an NBFC and which only enable data process, flow and encrypted form, required to carry the KYC and the periodical re-KYC of the customers.
So KYC guidelines are actually applicable to all the NBFCs. If you are onboarding anyone as a customer or you are giving any kind of services for the customer, you should be known to whom you are giving this. So this requires to carry. I mean, over to you, Bala sir or Sudhakar sir, have any?
You see, that only thing is not only having the KYC, when RBI is coming for inspection, this KYC is required even if you are lending money to your group companies, still you have to have the KYC check.
Yes.
And for that, you have to have a separate file. You have to show them that, look, the KYC check has happened and this is what the record for that is. If you are not having that, that will come in the observation of RBI inspection that the KYC has not been done.
In fact, it's not for that, sir. I'm telling you right now, for KYC, RBI is very stringent. KYC is not just only the KYC. They are, asking every NBFCs or even the banks are only the radar of RBI by stating that if KYC not done, okay, so and so penalty you have to be, fill up. You will be given opportunity of being heard as always for 2 times, and 3rd time you will be receiving a letter by stating that pay this much.
In fact, for the first time when the RBI inspection, when we said that, sir, it is a group company, we know the company, why the KYC is required? They said nothing doing. Whether it is a group company or whoever it is, if it is an entity, you are lending the money to such entity, you have to have the KYC done. So you have to treat every customer of yours as a separate entity and you have to do that, whether it is a group or relative or whoever it may be. Please ensure the KYC is done.
And also one more thing, that this cannot be outsourced because KYC is major considered. So if you are outsourcing, then they has to have the KUA and sub-KUA license. So that's also check mark that we need to take care to who you are doing with KYC and who is doing this activity.
I think the next question is the consulting company, which we already discussed this.
Bala, we will take it later. That letter complete the presentation, you say.
Yeah, Lina.
Okay.
Core investment company, that is to say a NBFC carrying on the business of acquisition of shares and securities and which satisfies the following condition as on the date of the last audited balance sheet. It holds not less than 90% of its net asset in the form of investment in equity shares, preference shares, bonds, debenture, debt, or loan in group companies. Its investment in the equity shares, including instruments which are compulsorily convertible in equity shares within a period of not exceeding 10 years from the date of issue in group companies, and units of infrastructure investment trust only as a sponsor constitute not less than 60% of its net asset as mentioned in clause 1 above. So it means if we talk about a group company which invest in its subsidiary, if it should constitute 90% of the net asset, but out of 90%, 60% should be in equity, either in equity shares or in compulsorily convertible securities within a period not exceeding 10 years, provided that the exposure of such CICs towards InvITs shall be limited to their holding as sponsor and shall not at any point in time exceed the minimum holding of units and tenor prescribed in this regard by SEBI InvIT Regulation 2014 as amended from time to time. It does not trade in its investment in shares, bonds, debentures, debt, or loans in group companies except through block sale for the purpose of dilution or disinvestment. This means when you have 90% of investment in the group company, the holding company should not trade in its investment except at the time of dilution or disinvestment by it. It does not carry on any other financial activity referred to in section 45I clause C and 45I clause F of the RBI Act 1934, except investment in bank deposit, market, money market investment instruments, including money market mutual funds and liquid mutual funds, government securities, and bonds or debentures issued by group companies, granting of loans to group companies, and issuing guarantees on behalf of group companies. Further, systematically important core investment company means a core investment company having total of not less than 100 crore, either individually or in aggregate along with other CICs in the group, and which raises or holds public funds. That means this is a group company. It is talking about a group company. Residuary non-banking company is a class of NBFC, which is a company and has its principal business receiving of deposit under any scheme or arrangement or in any other manner, and not being investment, asset financing, and loan company. So these are the residuary, which is not included in any type of NBFC. These companies are required to maintain investment as per directions of RBI in addition to liquid assets. The functioning of these companies is different from those of NBFCs in terms of method of mobilization of deposit and requirement of deployment of depositors' fund as per RBI directions. Besides, prudential then incorporation of NBFCs. Incorporation as a company. Form run for approval of name should contain financing as the principal activity. The principal business of NBFC mentioned in MOA while registering under the Companies Act shall be lending credit, making investment in various type of shares and stocks, leasing hire purchase, insurance business, chit business, and receiving deposits under any scheme or arrangement. Like in discussion also, we had, sir has mentioned a company which was in textile business, but it has its investment. So for incorporation purpose, when we file the form run, it should be mentioned as financing activity as its principal activity. And also in MOA, the NBFC activity should be mentioned as its object, primary object. Registration process with the RBI. After incorporation of company, the NBFC must obtain certificate of registration. For obtaining certificate of registration, NBFC should have minimum net own fund of rupees 10 crore. NBFC should make an application to RBI for registration. Registration of NBFC is done under section 45IA of RBI Act 1934. Registration of NBFC and net own fund. As per section 45(1)(a) of RBI Act, no NBFC shall commence or carry on the business of an NBFC without obtaining a certificate of registration issued under Chapter 3B. and having the net own fund of rupees 25 lakh rupees or such other amount not exceeding 100 crore, as the bank may application or in the official gazette specify, provided that the Reserve Bank of India may notify different amount of net own fund for different categories of NBFC. Like we have seen in the type of NBFCs, one of NBFC has 500 crore, 300 crore net of own fund requirements. So the upper limit can be anything, but the starting amount is specified by RBI. Earlier it was 25 lakh rupees. Now it is 10 crore, the minimum net own fund requirement. Currently applying for NBFC. Net own fund requirement is 10 crore. Previously it was 2 crore. Minimum net own fund may be higher depending on specific type of NBFC. So here net own fund is equals to paid up capital and free reserve subject to certain deductions. So let's see what is net own fund. Explanation of net own fund, we know that is paid up equity capital plus compulsorily convertible preference shares or other debt securities, if like debentures, they are compulsorily convertible, so they will be included in paid up equity capital. There's free reserve, which are freely distributable and includes balance in securities premium account and capital reserves representing surplus arising out of sale proceed of asset. But it excludes revaluation of asset account after deducting therefrom accumulated balance of loss, deferred revenue expenditure, and other intangible assets. Net own fund is the amount arrived as above minus the amount of investment of such company in share of its subsidiaries, companies in the same group, and all other NBFCs, and the book value of debentures, bonds, outstanding loans, and advances, including hire purchase, and these finance made and deposits with subsidiaries and companies in the same group to the extent it exceeds 10% of the own fund. The source of this explanation is from RBI FAQ. Procedure for application to the Reserve Bank for registration. The applicant company is required to apply online and submit a physical copy of the application along with the necessary document to the RO, that is Regional Office of the RBI. For Mumbai, it is headquarters is situated. For Maharashtra, it is situated in Mumbai. The application can be submitted online by accessing RBI secure website, which is given in the slide. At this stage, the applicant company will not need to go on to the Cosmos application, and hence user IDs are not required. The company can click for company registration on the login page of the Cosmos application. A window showing the Excel application form available for download would be displayed. The company can then download suitable application form, that is NBFC or SCRC, from the above website, key in the data and upload the application form. The company may note to indicate the correct name of the regional office in the field C8 of the annex identification particular in the Excel application form. The company would then get a company application reference number for the certificate of registration application filled on the line. Prerequisites before applying for registration as NBFC. It should have a minimum one director from NBFC background or senior banker as a full-time director in the company. Clean civil records, understanding of NBFC and finance businesses. Conditions to be fulfilled for getting registration. NBFC is or shall be in position to pay its present or future depositor in full and as when their claims are approved. Because RBI has been always concerned about the depositors for their hard-earned money. So the regulations are very stringent for NBFCs regarding the payback to the depositors. After affairs of the NBFCs are not being or are not likely to be conducted in a manner detrimental to the interest of its present or future depositors. General character of the management or the proposed management of the NBFC shall not be prejudicial to the public interest or the interest of its depositors. NBFC has an adequate capital structure and earning prospects. They have to mention their plannings, NBFCs, to their management and also to the board, their earning prospects, their future projects, and future of the NBFC. Granting registration to NBFC will be in public interest. Granting of registration should not be against the financial sector of the country. That is, it should be FATF compliant, ISO compliant. You cannot give money or lend money to for any terror purpose or money laundering purpose. Such other condition as the RBI may think fit. Cancellation of registration. This can be done by RBI also, and company can also suo motu surrender their registration. RBI may cancel a certificate of registration of NBFC on the following grounds, that is, ceases to carry on the business of NBFC in India, or at any time fails to fulfill any of the conditions such as adequate capital structure, earning prospects, public interest, monetary stability and economic growth, etc., or fails to comply with any direction issued by RBI under the provision of Chapter 3B of RBI Act, fails to maintain account as per directions of RBI, fails to submit or offer for inspection its books of accounts and other relevant documents when so demanded by an inspecting authority of RBI, or has been prohibited from accepting deposit by an order made by RBI for minimum 3 months. If any person is aggrieved by the order for cancellation of registration given by RBI, then such aggrieved person may file an appeal within 30 days to central government, and decision of central government shall be final. Further, suo motu cancellation of registration by NBFC, that is surrender of registration by company itself. RBI by its press release dated 1st of December 2022 for voluntary surrender of certificate of registration by NBFC. The grounds are the same as mentioned in the cancellation in the previous slide. The grounds are same for surrendering of the registration by the company. An application may be made by the company suo motu to the RBI for cancellation of its NBFC license. If it ceases to carry on NBFC business, RBI may, on receipt of such application, pass an order cancelling the registration of the NBFC along with the necessary directions, like to pay back the money of depositors or any default has been made by the NBFC, just to rectify all things before cancelling the registration. The company needs to comply with the order of RBI and then may proceed to voluntarily liquidate itself. That's it. Thank you.
Okay, let us run through the questions, whatever is appearing there. Let us see. Consulting company, I think we have discussed actually.
Yeah.
Private company providing the unsecured, the private company, the same group, that also I think we discussed elaborately. Our consulting company has stopped the business, but company is given the ICD of 5 lakh rupees giving to the, yeah, that's also, as we discussed, that 50% test also she elaborately talked about it. Or NGOs, NPOs, FPOs are listed in the social stock exchange NBFCs. Social stock.
Question is,
but the social exchange listing is according to the company. If they want to build, they can be listed, na?
it can be, it depends on the company that.
It depends upon the companies, whether the company wants to list or something like that. It depends upon the company. I don't think there is anything we need to answer on this. I think so.
Yes.
For listing on the social stock exchange, it should be a social enterprise, maybe for profit, may not be for profit. Yes. If it is for profit social enterprise, then it has to get it listed on the main board. Otherwise, on the social stock exchange. That has nothing to do with the NBFC company regulations and all.
Correct. Somebody is actually asking, Sudhakar sir, if both the income test and the asset test are affirmative, such companies are required to reach the NBFC with RBI within 3 months. What are the penal provisions if a company has not registered within 3 months?
You can, first and foremost thing is you are not supposed to do the business. Okay, and after that, whatever the RBI penal provisions are there, offhand, I'm not aware of.
We are not able to say what is
how many
RBI
thousands,
penalty.
how many lakhs, and all those
No,
things.
no, no. It is normally, as Madhavi has put it depends upon the decision of the people there. It is 3 times, 5 times. It runs in heavy penalties. That nobody can answer quantifying the things. There's nothing like a quantification here. Yes, Madhavi.
They have their own calculation. They have their own calculation. We cannot even state that.
Can you explain what are the pre-requirement to start a NBFC? I think we have explained that now actually. In fact, last slide was there talking what are the prerequisites, etc. What is the type of on NBFC ND or type 2 NBFC ND?
So type 1 is basically that there is no customer intervention directly that, based in our, so which is actually non-deposit, taking NBFCs, we can say. And type 2 is like they have the customer interference. Customers are coming for deposit. So this is basically a non-deposit taking and deposit taking. It's not ND, it's actually deposit taking and non-deposit taking. So that's how it's been classified.
Can you please explain CIC conditions in detail one by one?
She has, I guess, placed a slide for that.
There is a slide she has already explained, I think, CIC. Yeah.
See, primarily it should be that 90% of your investments, lending and everything should be within the group. Out of that 90%, 60% should be in the equity shares. That equity shares means including the convertible preference shares or debentures. That conversion should take place within a span of 10 years, if I am not wrong. Primarily, these are the primary conditions for to get registered as CSC.
So Sudhakar ji, why don't you explain, जो हम लोग master classes, how we are going to do it, to the audience, because we are going to run the master series, right, or master classes. So what is the format and all? हम लोग कैसे करने वाले आगे?
No, see that in this masterclass format, we are not going to say that, how you will arrive at and all, because we are primarily going to discuss that what is an NBFC company, registration is how, cancellation is how, and what are the compliances you have to make and all. So in this, we are proposing to have, as Bala mentioned, that 4 webinars we are going to do it. Today is the first one. And second thing is that we are going to discuss in the coming 3 webinars, the prudential norms for the NBFC, ND companies and NBFC deposit accepting companies, similarly systemically important companies, non-systemically important companies. Similarly, NBFC companies are also have to comply with the corporate governance norms of RBI. Okay, they have their own corporate governance norms because as per that corporate governance norms, NBFCs have to constitute some committees, they have to formulate some policies. So, plus they have to file monthly returns, quarterly returns, half-yearly returns, yearly returns. So these are all the things we are going to discuss, but we are not going to say that, unless until if somebody wants to ask a question that this is the thing and all. As I told you, CIC, there are a lot of conditions are there. As what's called as, Lina has mentioned already. But primary thing what one has to say is that if you are carrying, as I told you, that if you are in your balance sheet, if your assets are more than 50% are financial assets means either in the investments or lending or whatever it is and all. And the income in the profit and loss account, more than 50% of your income is coming from the financial assets. This is the word used is and not or. That means both the conditions are to be satisfied. Your assets are to be there. The income from the assets are to be there. Then only you have to go for registration. If you are not getting registered, you are not supposed to carry on the business. If I carry on the business, what will happen? That RBI, obviously, they will come and they will compel you to close the business and they will penalize you also accordingly. And that what is the CIC difference between CIC and the NBFC? The primary difference is nothing but CIC companies are those companies which are primarily investing within the group and primarily lending to the companies within the group. This is what I was mentioning at one point of time, almost 2.5 decades before, when I was handling some companies within the group. When I am investing my money within my group, I am lending the money to my group companies. Why I have to go for so much elaborate compliances? So this core investment company concept has been brought in. The CIC companies, the rigor will be slightly less. The compliances are less in comparison to the NBFC companies. But every company cannot get registered with CIC as a CIC company because there are certain conditions one has to comply with. Okay. At the same point of time, let me also reiterate that I have already mentioned, if you are starting your company to do one particular business, for whatever the reasons you are not able to take up that business. In the meantime, whatever the funds are there, you started investing either in the primary market or the secondary market, or you are lending that money, and then you are getting the income from that assets. And if you are falling in this 50% of financial assets, 50% income from that financial assets, definitely you are indulging in an NBFC company, NBFC business. Obviously, you have to go for registration. There you will have a problem that, number one, that ROC also may give you a show cause notice that your main object is something and you are doing something else. So if you have to decide that, am I going to do the business for which I have incorporated this company, for the purpose for which I have mobilized the funds, or I am going to diversify into NBFC activities? If you are going to diversify into NBFC activities, by all means, please change your objects clause and then go into NBFC business. But you cannot camouflage. This is nothing but camouflaging that you are showing to the world that your main object is something and you are doing some other business. That is not acceptable and allowable. This is primarily, I think, summarization of today's webinar. Madhavi, if you want to say further anything, Bala sir, you also.
Let us also see what other people are saying. The platform which are facilitating fundraising, I think this we had an elaborated discussion because Atul Mehta has brought in some over, etc. and other things.
Bala sir, 1 minute. In fact, Amita is there. Amita Desai is there in this participants, and Amita has some, in fact, she has some, that earlier she used to discuss with me some issues pertaining to NBFC companies. Amita, if you can share any of your experiences or any kind of issues you are facing and all, it will be beneficial to us as well as to the participants. You can switch on your video as well as your audio also, Amita. You are permitted for that, if I am not wrong. Amita, you are there?
Sorry?
No, I'm just asking Amita Desai whether she is there.
Okay. She is left, it seems.
No, she is there, but anyway, she's not able to hear. Anyway, Bala sir, please go ahead.
Okay.
We'll have to unmute her, There are Saddam, inko unmute karo, Amita Desai.
Yeah, meanwhile,
okay.
Bala, you can. Yeah.
There are some challenges, so we'll not be able to unmute her.
As a practical approach, can we think of enhancing the income under the purview 50-50 criteria as a private company, only investment company in its group company, rather than getting registration under NBFC? Can we think of enhancing income under the purview of 50-50 criteria for the private company?
No. That time, see, that you are asking this, what happens when a company net on funds less than 10 crores? This is the question you are asking, Bala?
Yeah. No.
See, that point of...
No, here somebody has put, this is, I think, question I'm reading from Santo. As a practical approach, can we think of enhancing the income under the purview of 50-50 criteria for a private company, only investment company in the group company, rather than getting registration under NBFC?
Yeah, I see that if you don't want to get registered, you have to create some other income.
Yeah, that is
profit and loss account. That is a simple thing, yeah. That what you have to do is you have to bring down the income from the financial assets to less than 50% of your total income. How you will do that and all, whether you will do business, whether you will do whatever it is and all, that is up to you.
And somebody has
that is the public platform. One cannot advise you.
I don't know. There's some question is there. They are permitted of the accepted deposit. They need not promise a return on investment. Should they be registered with RBI?
If you are accepting deposits, again, it is an investment activity only. I mean, that you are borrowing more or less, doing an investment kind of business. I think if it is falling in the NBFC things, you have to get yourself registered. You are accepting deposits and can't get registration of RBI. I don't think it is acceptable.
What happens when a company with the net owned funds of less than 10 crores and meets both the 50% condition of financial assets and income.
Increase your net owned funds to 10 crores if you want to do that business. Otherwise, wind up the business.
That is all the questions, I think. There are many appreciations, sir. People saying good initiative to run the masterclass series, etc. and other thing and all. And I must take this opportunity to congratulate Leena, because in the beginning, as Sudhakar puts it, she is a management trainee, but the way she summarized the entire presentations, brought out the concept, that also in the fluid understanding, simple English, the flow, what she has explained, is really, really commendable. She has done a wonderful job. You have done a wonderful homework, Leena. I must express the congratulations on my own behalf, even on the other people's behalf also, because I am sure very clearly, because now also we can see more than 100 people are still there. Although the highest number was 150, but now even at the closing hours, we are still having 105. That itself shows what sort of the presentation, what sort of the webinar we are actually running. It speaks about a volume about you. My great appreciation to you.
Thank you so much, sir.
Madhavi, you are really, really great. You could actually bring out a lot of things inside about the NBFCs based on your practical experience. It was really, really very valuable. Sudhakar, I won't thank separately because he is our own man. He is a well-learned person recognized across, so I won't take that sort of the liberty. But definitely, yes, it is really a value-adding session. I look forward to this future session also.
And thank you so much. I would like to thank Dipti ma'am also, who just called me and then tell me that Madhavi have to come for this, and I'll be inviting you. And I must say that this is really a great opportunity to being interact with all of you and being a panelist. Thank you so much, Atul sir. Thanks.
Thank you all, sir. Thank you very much. We'll make it more interesting, and going further, we'll discuss all those things, minutely in NBFC, sir. Many questions. Probably, we can also cover those housing finance company, insurance company. I don't know. Probably we can take it separately. But yeah, there are a lot of compliance policies in all those companies. I believe yes.
Atul, if you want to cover insurance company, we'll have to take it separately because this thing will be governed under the IRDA regulations separately. Yes. That itself will become a session. Yeah.
Huge, yeah. So thank you all once again.
My only submission before we conclude, my only submission to the participants is that because for the next 3 webinars, and I request all of you to come prepared because the prudential norms and the guidelines are there. They are slightly complicated unless until one is have a what's called as a considerable reading to that. Not easy to understand that. You may not be able to appreciate it. So kindly go through that before attending the next coming the 3 webinars. And Madhavi will trouble you again in the next 3 webinars, and we'll see that at what time we have to trouble you. And I'm sure that you will oblige us once again. Thank you very much.
Sure. Thank you, sir. Thank you so much.
Thank you all. Thank you, Bala, Sudhakar ji, Madhavi, and Dina. Wonderful presentations. Thanks.
And in fact, my compliments to you, Atul. Today you brought very good questions and you have provoked the panelists to share their experiences.
I'll be there, sir. Don't worry.
Thanks, sir. Thanks a lot to everybody. Have a great day.
Thanks,
Have a good day, good weekend. Thank you.
Thank you.